Hi, I'm Enoch St Clair, and I'm happy to be here at CoSpace. I'm the owner and senior accountant at St Clair Financial Services. So I am happy to be a part of the longest podcast. I'm here to talk about, some, I guess, what some people might consider boring stuff, but some people might call it good stuff. So I'm here to talk about the money. I'm here to talk about taxes. And my podcast today is called The Gray Area of Taxes. So let's see. So we get into we get into that moment where we figure out that, hey, I may be paying too much, or I may not be paying enough for taxes, and why am I paying a certain amount and the person next to me is not paying a certain amount. So the thing that we all have to understand, that taxes is not a one size fit all type of situation. It is on a per basis situation. And that's why I call this podcast The Gray Area of Taxes, because what might work for me may not work for you, may not work for the next person, or and vice versa. So what makes taxes so different, and why is it so complicated? So there's two type of taxpayers that I typically run into. So I like to compare the taxpayers to going to the casino. You have a slot machine person and you have a poker player. So they both are going in with the intentions of gambling and making money, right? But the slot machine person, they put their money into a slot machine, they pull a lever, and they hope that this machine gives you some money back, right? And then you have the poker player that goes in, and yes, we know the house always wins, but at least I go in with some kind of skill and some kind of strategy to make sure that I have a better opportunity of winning. So that's the two differences. When you are a W 2 person, you just work a 9 to 5, and you don't have much other situations going on. Unfortunately, our tax system is not in favor of your situation. The whole tax system was created for businesses, period. So this tax system is favors businesses, and that's why I can count on two hands how many deductions and credits that I can call out for an individual, but for a business, the list is just too big for me to go down. So as a business owner, you have a sea of deductions and credits and strategies that you can implement to leverage and also offset your taxes. One of the things that I um, in my experience that I've learned from affluent business owners or people who make a significant amount of money is that they spend a lot of times strategizing and planning when it comes to tax preparation. It's more of a event for them, as opposed to just, I'm just going to work and hopefully when I file I don't owe or I get some money back. So there is some kind of being intentional on getting the information that you need and planning to be successful, because for a lot of Americans, taxes is your biggest expense. So if you know that, then I believe that more time should be spent on trying to minimize it, or at least strategize and put things in place to offset this tax burden that you may have. Um, I'm not telling people like, hey, you need to go start a business, or you need to invest in certain things to and risk your money. So what I can say though is sometimes you may have deductions right in front of you that you don't know. You might be renting a room out to your uncle or your brother, and they're paying you rent every month. Now you turned that house into some kind of deduction, because now you're renting, because the IRS expects you to pay taxes on that rent that you collect. But what they don't tell you is that you're able to take the expenses from that business that you've created. So just that situation there, you could use that to leverage and offset your taxes legally, because you're legally accepting rent from this person. So you can legally subtract the FPL bill, a portion of your mortgage, which includes the interest, the taxes, the property insurance. See how just by you opening that gate by saying, yes, I do collect rent, but it also opens up a gate saying, but because of your rules, I can now deduct these A, B, C, D, E, F, G. So these are certain things that I try to inform my clients that, hey, look around your situation, see where you can use different aspects of your life to create tax leverage so that you don't have to pay a lot of taxes. One of the things that I saw that wealthy business owners do is they become their own suppliers. So they may have a business, and let's just say it's a restaurant, and then they open up another business where they are supplying the linen. So now they're right. The linen company may not make any money, but they're writing that expense off from the restaurant because they have to pay the linen company. So and it's totally legal. So they're spending the money, but they're using ways to be able to write off that money legally and not, and also to maximize profits and revenues and so forth. So those are different things that I would say that you could use to maximize your taxes and help strategize and pretty much try to survive this system.